equity component of the North ACI Equity Fund underperformed the JSE Cap Swix by 1.5% during the fourth quarter of 2019 and 1.6% in 2019. Although the fund was behind its benchmark, we remain pleased with the overall good stock picking in the fund despite the impact of negative sector allocation effects. In this regard, the fund's underweight position to resources negatively impacted the returns by 2.5% versus its benchmark, while positive intra-sector stock picking added 1% of alpha. Of the top 20 best performing stocks of 2019, 8 were resources which we didn't own, but of the next 20 we owned 8. From a philosophical perspective, our investment process leads us to buy high quality companies and to often deselect businesses which don't reflect persistency of inherent quality characteristics such as low debt levels, pricing power and sustainable cash returns. We believe this approach is the right one and over the product's time horizon will generate significant outperformance. Looking forward, we expect the market to remain highly volatile in the lead up to February's budget speech as the state looks to balance fiscal austerity to pro-growth measures. In the absence of significant near-term structural reforms, we expect growth to remain muted and impact corporate earnings. Our quantitative top-down work suggests that whilst market multiples are highly supportive and at multi-year lows, with the JSE Cap Swix trading close to 11.5 times forward earnings, modest corporate earnings are likely to moderate market perspective returns to about 10 to 15% based on our estimates. Similarly, our bottom-up fundamental research highlights several attractively priced businesses, despite the difficult backdrop, with a local buy list offering potentially double-digit returns for 2020. From a sector perspective, we remain underweight resources as we broadly expect key commodity prices such as iron ore to moderate to normal long-term levels. We see good opportunities in the high-quality large-cap South African industrial space, but remain cautious of significant stress in the system, particularly around discretionary consumer-related spending stocks such as apparel retailers, as well as travel and leisure. Amongst financial stocks, we remain broadly concerned for listed property and life insurers, but we see value following a significant derating of South African banks and selected general financial counters. Closing, the fund is well diversified with exposure to 40 positions across various sectors, which we believe will outperform over the medium term.